yeah, basically that. Okay. So it will be less of me, really just doing things today, but more of you asking any questions, and then I'll be providing any answers based on your questions and also maybe clarifications and all. So let me just think I'm already doing this. Okay. Let me okay, so I think you can unmute yourself. So yeah, let's talk. Let's chat basically. Yeah. So who wants to go first?
Yeah.
Okay, speak on. Let's see.
And practice. So, hopefully when the till you release the videos, I'll just do that with myself and what is the
Okay, it doesn't seem like your voice is coming through so well. Um, maybe the connection or maybe the audio device. Um, if you may, you can just feel free to also just maybe put the question in the chat, right? Maybe you can just type it and I'll read it and then respond and answer that. So yeah, okay, all right. So in that case, then Williams, any question, any area, anything you want me to sort of go through?
No question for now.
Mm-hmm.
Yeah.
Okay.
Though the area of lot size and calculating risk management,
Mm-hmm.
I feel like I haven't gotten it properly, and I need I need one-on-one mentorship kind of to set up all everything I need. So it's just about setting up, not questions per se. If I can set up, at least try a demo trade with proper risk management, then I think I'm good to go. Then also the news as well. Like how do you navigate the news? Like where do you check to know whether you should trade or you should not trade, depending on your strategy? Sorry, I'm outside. I'm also trying to get something close by.
All right, no
So
problem.
so like how to navigate, know when to trade based on the news and when to stay out of the market.
Mm-hmm.
So
Yeah.
that's the question.
Okay. That's okay. So those are very valid questions, if you ask me,
Um,
right? So
yeah.
yeah. Okay. So that's okay. Yeah. So I'm still waiting for. You can still put your question in the chat. Since your voice wasn't coming through. Okay.
Was I not there?
No, no, not you, not you.
Okay,
That was
okay.
yeah, that was Joseph. So yeah, so you feel free to add that to the chat. Well, okay, I'm gonna try to just like let me just try to answer some of the things you just raised. One is setting up an account. Now, because all we've gone through, supply demand, and we've gone through everything about, a market structure, and now to apply that for the purpose of getting an account or getting a prop firm account, because um, all through our sessions, I've always, been talking about prop firms, how prop firms can help you to basically secure an account. You don't have to spend your own money, you have to risk your own money in a way. So one of the things I would always suggest is, hey, go through the route of using prop firms first. Prop firms, they even allow you, for example, FTMO, as you can see on the screen, they even allow you to, try,
Sorry, I
can
can't
you,
see your screen.
oh, thanks for pointing that out. I wasn't sharing again. Let me do that. Okay, so I'm not sharing my screen. All right. So speaking about, prop firms, or speaking about practicing, right? I would always suggest that you go the route of using prop firms to practice, because eventually all I've been emphasizing is, hey, try to, use the environment that you most likely are gonna use if you want to start trading live account. So FTMO, for example, Of course, this is free advertisement for them. But FTMO, for example, they provide you with a trial account. That means you can try out what it looks like to trade with them, on their platform using their everything for maybe some days. And then, that begins to give you an idea, a feel of what it's like to even trade using, something like FTMO, using the objectives and everything that they subscribe, traders to. And the reason for this is simply because the goal is to say, hey, you don't have to risk, even if you're going to get their lowest account, which is like $10,000. You don't have to risk your own money, to say, I want you to start trading. You can afford to say, okay, instead of risking maybe 155 pounds, or is this euro now, to trade, why not use that to get a $10,000 account and then try to see how you can practice and you can scale their verification. Of course, not now. This is after you've done the practice, you know what you're doing, you've journaled, you've collected data, and then you can say, okay, I'm now ready to test it. But since they provide some trial for you, you can use a trial account, and I'm going to open one for you so you see also how to set that up, right? So to get that going, let me just detach this screen here. Okay, so just a sec. I want to put this in a place where we can always refer to it. Okay, so cool. So this so let me try to open an account while we're all here so you can see how this works, right? So I'll try to open an account with them. Let me use this. Okay, so the request for Mr. I'll put my details there. Is this compulsory? My country, of course, I'll put Nigeria. Agree, all the agreeing, everything, right? So you just agree to everything. Okay, I have to provide a mobile phone number, so I'll put that there. Please specify mobile, I've done that. You need to verify your email address. Okay, so this is something they want me to do. So let me just do that. So this is typically what you're also going to do when you choose to, move forward, right? And also try them out. So let me just do that. Let me verify the email that they've sent, this address. Just verify that. Okay, cool. So I verified my email, and now you can see I now have access to the FTMO client area. Now here you can see they have a free trial, master your skills, practice your trading without risking anything, no eligibility for an FTMO account. You have 14 days to practice. You have basic account analysis and some apps that they make available. Until you practice, until you're ready, you can now say you want to start, maybe take a trial of the FTMO challenge. But for now, the trial, it's just perfect. It gives you an idea and also an understanding of what the platform is going to be like. Now, aside that, you also have this download area here. I'll just open it on the new tab. In the download area, you can actually download, some applications that you find useful, like MT4 and also MT5. Actually, this is what you need to download for FTMO. You need to download rather the MT4 and the MT or the MT5 account from FTMO if you're going to be trading with them. So let me just download the MT4 account for my computer. So let me do that there. So that should download. Well, it's a large file. But yeah, so this is where you can download that. So they have MT5 too, and also CTrader. I don't use CTrader. I usually just use MT4 anyway. So that might be a long download anyways, but that's that. Now going back to, sorry, here, the free trial. So let me just click on try for free. That's what is downloading. So try for free. So you can see here. So when you click try for free, it says free trial registration, USD. That's what we're going to use, the currency, normal mode, and then we're going to use any account size. So preferably use the account size you would want to get first, and I always advise go for the lowest one, right? So $10,000 FTMO, not swing, and then MT4 is the platform we're going to use, and then we click on agree and all of that. If you want to subscribe to your newsletter, of course you can, which is also not bad. So yeah, so with that, I've clicked everything, and now you can basically see this is of course the login details, and then you have the password, and then now I can simply, now if you haven't downloaded MT4 for FTMO, you can now download for Windows or for Mac, and then all you need to do is copy this information, login and the master password, and then put that in your MT4. So this guy here is still downloading. So yeah, so basically when you do that, you've set up the environment, and since for this trial account we chose $10,000, we can now begin to practice using that. Now they have two important buttons here. Go to account metrics and also client area. If we go to account metrics, let's see what they have there. So just a sec for that. Okay, so I believe it's sharing now, and you can see this. Okay, so I was sharing on the FTMO account what it's like. So by the time you sort of log in, you can see here I have this 10,000. That's what I selected, the lowest. And then what else? Yeah, so you have the metrics button and all of that for you to see your statistics. And then what else? So I already clicked the try for free, so that's why I have this. So if I click on metrics, for example, so you can see here, by the time you take the first trade, you begin to see the chart show here. You see these are the trading objectives for FTMO. Minimum of 5 trading days for you to pass. The maximum loss you can have on the account is 10%. Or sorry, 5% maximum daily loss. You must not lose 5% of the account in a day, which is of course a good risk management objective, even if you're not trading a prop firm account. So that simply means don't lose 5% literally in a single day trading. And then you also have a maximum loss of 10%, so you must not lose 10% of your account. And yeah, so if you lose it, this is going to change to not passing and all of that. Then you have a profit target of 5%, right? So profit target of $500, and then you pass the trial, and that's what they have here. So you have, by the time you take the first trade, all of this will begin to come alive. Number of trades, the lot size, your win rate, your average profit, your average loss, and all of this data will begin to be displayed here. The trades you take also be registered under this trading journal here, so you see all of that information here. So this is basically what's going to look like eventually. And of course you have this credentials button here that allow you to quickly copy your credentials, so your login, your password, and all of that. You can copy all the information, download your MT4, MT5, and then you go and put that information there. Let me see if the download is done. Oh, the download stopped. Probably that's why my internet even stopped. I hope it doesn't disconnect us again, but let's see if this works. Okay, so yeah, so this is basically how you can set up your FTMO account and actually use this to demo trade. That's what I'm going to say. And of course you have 14 days for this. You can always register with another Gmail account and then get another 14 days, and you can do that again and again and again to practice your skill set, your mindset, and also to be able to gather data and gather information, because that's very important. So that's it for FTM1. Of course, they have this leaderboard here that you can access, so you're able to see based on their current traders, those who are topping the charts. This can serve as an inspiration for you. So you can see for those trading $10,000 account, you have somebody who is making 21% already in the month. Those trading $200,000 account, you have somebody who is making 27%, and then it goes on and on. So this can serve as a motivation too, for you, even as you begin to look to trade, all of this account or this on this, or how to trade these platforms, right? So that is that with the FTMO setup. If this MT4 just finished downloading, I'm going to install it and then copy all the credentials and put there so you can see what it's like, right? So that is that for that. Now, when it comes to lot size, like I shared the other time, the EA I shared as the tool I shared as a position size, the tool allows you to be able to automatically calculate the lot size depending on your account. You really don't have to bother about calculating manually the lot size yourself. All you need to be bothered about is what is the percentage of your account you're risking. That is really the most important thing. You shouldn't risk more than 0.5% of your account per trade, so, and that is the risk management tool that you should have in place, and you must have that also, of course, in the trading plan that I even shared with you. You shouldn't risk more than 0.5% of your account per trade, and the reason is simply because the goal is to survive. You want to be able to survive, then you can thrive. But if you risk a lot of more of your account, 1%, 2%, when you're just starting out and all of that, you wouldn't last too long. And that is why for FTMO you can see that they have strict objectives for their traders, and the objective is this: you can't even lose more than 5% of your account in a day, because if you're already risking a lot, 1, 2, or maybe 2%, 3% of your account just for one trade, that means you're not going to last. And that is the reality of trading, because the goal is you want to be able to survive. So what you should more concerned about is your percentage risk. What are you risking? And if you set up the account based on the risk management that I shared earlier with you, the risk management tool, you really don't have to even bother about lot size, because the lot size can vary a lot depending on where you are the accounts. You can imagine maybe trying to calculate lot size of 23.75 and all of that's a lot of stress. Where you can simply just use the 0.5% setup on the EA, the position sizer, and then install that on your MT4, MT5, and it automatically just calculates your lot size for you. So that takes out the headache. So that way you're able to focus more on what really matters. You're trading, focus more on the setup, focus more on collecting data, focus more on journaling and all of that. Yeah. So that is that for that. Okay. So before I come to the question, the chat, now I think this is downloaded. So let me try to install that. Okay. So this guy just gave, sorry, I should have, this is my mistake. I should have downloaded the Microsoft Word version. Yeah. Okay, cool. Uh-oh. Uh-oh. What's this? Let me try and okay. I should have the Microsoft version. Okay, it's here. So let me install this on my Microsoft interface here. So we can just copy the data in and also do this together with you. You can see how these things work, right? So just a sec. So while that is coming on, let's copy the credentials. So we have the login data here. Okay, so finish. Where are you? FTMO MT4. Okay, this. So let's open that up. So just a sec for that to come up. Okay, while that is coming up, let me show you where to get your news. forexfactory.com/calendar. All right, so this is where you should come to find your news. So this is basically Forex Factory. So if you just type forexfactory.com/calendar, it will take you to Forex Factory, and you can come in there, open an account so that you can save your time zone, your settings, and the time is going to reflect accordingly, on the news items for you. Okay. So for me, I have already set that I only want to view high impact news to medium impact news. And I did that by clicking on this filter button here. And then I selected high impact and medium impact. I'm not interested in low impact news. I'm only also interested in the currency pair of the EU and the USD. So the news items that affect these two pairs, EU, the euro dollar, that's what I'm only interested in, and all type of events. So that's my filter. So by default, anytime I come, I see, excuse me, anytime I come, I see, the news item for the euro and the dollar. And I also see that, okay, today today there wasn't any real news, high impact news, but yesterday we had one at 3:45, and then tomorrow we have one by 2:30. So yeah, but always make sure you register, and then you set up your time zone so that it actually shows you the correct time for the trade. So forexfactory.com /calendar. If you just type Forex Factory on Google, you're going to be taken brought there. So let's see. Reload page. I should still be logged in now, right? Okay, so here we go. Okay, so this is our FTMO platform. So let's log into an account. So log into trade account. So I've copied that. Let me copy the password. Let me log in. I was logged out because of non-activity, I believe. I'll log back in. Oh my, they said multiple registrations identified due to multiple registrations taken under your credentials. Oh no. So I guess, yeah, I actually do have another account with FTM where I have similar names. So I guess that's why the algorithm must have detected that and also suspended me. Anyways, but you get the drift. You can simply register, get the free account, and then you can do the test, right? That shouldn't really be a big deal. So they sent that to me, but I don't think I have access to the credentials here. So, but yeah, so you understand how that works anyway. So that's how you can actually get to that, right? So when it comes to risk management, I just advise, I've already, explained how you can set up, the expert advisor, the position sizer, and that is this guy here. If I try to make sorry, let me see, think of the market watch. Okay, so anyways, yeah, so if you set up the position sizer like I showed you, you really don't have to bother about what now, about your lot size. All you need to bother about is what position, what percentage of your account are you risking. That's the most important thing. And the reason for that is this: if you think of your positions in lot sizes, you may not be helping yourself in the long term, because let me say, for example, the lot size of 100, depending on your account size, would depend on your would vary from account to account. But if you're using percentages, if I'm risking 0.5 of my account, it is 0.5 of what I have. That can be a lot for somebody else. That can be, small for me, but it's basically a percentage of my account. But lot sizes, can really just get confusing and just get muddled up in a lot of things. So that is that anyways, about lot sizes, right? So, yeah, so let me answer this question here that we have, counter trend trading, right? Now, counter trend trading, basically it's just going against the trend. Okay, and how that works is, I think I did a video recently, the video on the, I think, 1 to 18, I did that on YouTube, on trying to trade, counter to the dominant move, right, in the market. So I did that video, and that was, I think, this video here. So this was actually a trade that sort of went counter to the major narrative. Okay, and the thing about this is that when it comes to trading counter trend, now you must always understand or know where your dominant trend is. Okay, so if I show you something like this now, like today, for example, I had a bias based on market structure. Now that this is a 4-hour chart, this one here. So based on market structure, I had a bias, that okay, since this high was taken out, the market was expected to pull back, which happened, and now it was the pullback that actually, the counter trend that actually showed in that video, which I'm going to highlight a little bit. So now by default, you always want to catch, for example, the market broke structure here. You always want to catch this low so that you can ride it back, to the previous high. That's always, primarily your objective as a trader. So you want to be able to catch the higher low so you can trade in the direction of the dominant trade. Now, you know that every time you have a break of structure, you always should expect a pullback. After a break of structure, always expect a pullback. That is the deal. So let's say, assuming this is your, let's say the trade we're here, right? Let's just take us to that point in time. So let's say we're here, for example. You can see here that this was a previous high. The market, made pullback expectedly. Now made an attempt to take out this high, but failed at this point, right? And left a giant wick, right? And then pulled back into this area, and then now made a move that now eventually took out this high, and that now confirmed our break of structure on the higher time frame, which is the 4-hour. Now, after the 4-hour break of structure, what we expect next? What you should expect next is a pullback, right? Now, that pullback is what we call, the counter trend. You're expecting a pullback that goes against the dominant trend. Now, because of the move you've seen here, price, was here, made a high, pull back, tried to take that, it failed, and then pull back again, and then broke structure. So from this, you already know that the market is already in an upward trend, right? Because you can see this was a low, a higher low that took out a previous high. So this is obviously an upward trend. Now, it's always safe to trade in the direction of the trend, right? And that's why you always hear the cliche that says the trend is your friend, right? Now, if you want to trade in direction of the trend, that means you'd always have to wait until you get confirmation that the trend wants to continue. Then you now look for a position to trade in the direction of the trend. Now, that can be a lot of it can take a lot of pain to wait, a lot of times, and sometimes you can have a lot of false moves anyways that always take you out, right? So instead of waiting and saying, okay, until I'm able to see that move that can take me in the direction of the trend, you can actually trade the pullback. So what you now do is to anticipate, after a break of structure, you anticipate a pullback, right? And that was what happened, the other day. So this was the 4-hour. Now by 7 a.m., that's when this 4-hour candle opened. And then, I was expecting a pullback on the 4-hour, primarily because we were in a 4-hour supply zone. This area here is a 4-hour supply zone, right? If you go down to the left, you see that a zone was created, and that was why price, was coming into this zone and rejecting, coming in and rejecting. So it was a 4-hour supply zone, and it also doubled as a daily supply zone anyways. So the expectation anyways, or my market bias was, okay, there was going to be a pullback. Now sometimes it can happen that price will pull back a little bit and then just continue up. And sometimes it may just happen that price, will just pull back and then pull deeper into, this zone before going up. And sometimes it may just completely reverse. Market can do anything. So, but we have what we call an expectational order flow, right? So we have seen a break of structure. We know the 4-hour is bullish because of this break of structure. So we expect that bullish 4-hour structure will continue, but we don't know when that will happen. That can happen anytime. So what you now do is now go down to the 15 minutes. So it was 7 a.m. already in the morning. So I'll go down to the 15 minutes and let's see, how to catch a move on the 15 minutes. So just a sec. This is still loading. Okay, so here we are. So cool. So this is basically, what we are on the 15 minutes, right? So where are we? Let's look at, the major structure. So this was the previous high, also on the 4-hour. This was the break of structure. The market pulled like this. So at around what time? Let's see. At around 7 a.m. here, this is also where the candle was, right? So I'll be in the market at this time. So let me show you literally how, I would actually, follow price action. Let's just do this together. And this is basically, how you can trade counter trend. And this is also important because now you have to understand market structure for you to actually do all of these things successfully, and it will only come through practice. So you literally have to begin, and that's why usually I share the free daily chart markup on on Telegram. You can actually use that. I'll even prefer that start mapping structure yourself. And then when I post all those things, I usually will post it before 8 a.m. because London opens by 8 a.m. You can always, after you've done your own marking, you can always look at, my own markups and compare what you've done, what I've done, and that will begin to improve your understanding of, market structure. So this was 7 a.m. here, as you can see. So by this time, I'm already on the chart. Most likely, I've already done the markups. I've shared this, on the Telegram group and all of that. So you'll see something like this. Now with this, what do I want to see before I begin to form a bias on trading? I already know that there has been a 4-hour break of structure. So the first thing I want to see before I enter a position is a change of character on the 15 minutes chart, right? So what do? I know that price, broke this 4-hour, break of structure here that we have here, and also the 15-minute swing break of structure. So here the price made a high here. This was the movement. We made a high, try pulling back, didn't take out this high, just playing around this area here like this, made a small high, going up, came back here. This was of course during Asia session, so I'm not even trading at this time, so I don't care about the price action here. And then we made this high here, and then price was now here by 7 a.m. right? So obviously I can see here that we're having several lows, but these lows are yet to be taken out. So for me to want to trade a counter trend, I want to see something like this first: a break of structure to the downside, taking out all these lows, and then a retest of this area. Then I can now look for a 1-minute entry to now trade the counter trend back down. That's what I'll be looking for. So let's see how this actually played out, right? So now let me play the candle. Okay, so this was 15 minutes. So let's look at this. It's 7 a.m. rather. Okay, so 7:15. Now you can see that this actually took out this low, right? But then this is 7:15, and I don't actually take trades. I used to take trades before London open, but I discovered that I usually take a lot of losses when I try to do that. So I've basically decided to always wait for for 8 a.m. open before I begin to look for opportunities. Please, just a second, okay? I'm coming. Okay, so yeah, so I now wait for 8 a.m. before I actually look for opportunities. Okay, so even though I've seen this by 7 a.m., this was like a a change of character in the 15 minutes. I will usually not do anything because I'm waiting for 8 a.m. right? So 7:15, let's continue and see what happens. This was the next candle will be 7:30. Okay, we'll pull back up. Nice. So now I've seen this. This is 7:45, still not 7 a.m. So I have nothing to do. I can see that the candle tried to take out this high but left a giant wick which is a good sign for me that, hey, there's a massive rejection here and possibly we may get that change of character to the downside for us to short, right? So this is 7:45, and then the next candle will be 8 a.m. You can see that giant wick again. The candle now has taken this high, right, and left a large candle here. Remember, we're still in the 4-hour supply on the 4-hour, so we have a large candle here. So I haven't seen that change of character to the downside. Remember, for me to trade, I have to see to trade the pullback, because I know there has been a break of structure on the 4-hour, and after a break of structure, what do you expect? A pullback. So my bias is to trade the pullback. So here you have, this. Now, because this is already 8 a.m., typically after this break of structure, I can assume that now price reacted to this buy to sell candle here. And that's why I drew this zone, as you can see. Price came in there, reacted to it, and then took out this previous high, right? So I can say I can draw this, this zone here like this. As you can see, I drew that, expecting that if price comes back in here, I can trade price up. But that could be, I could be wrong, because already we're in a supply zone and we've seen a break of structure. I will expect a pullback. I could still trade, in the direction of the trend, but that also could be risky. But that's something you can also do if you actually wanted to do it. And if I also had a bias, I probably would have traded in that direction. So let's see what happens after 8 a.m. Okay, so price returned to this demand zone, right? So you can see this is a demand zone because this was the last candle down before price pushed up and took out this high. So that's why it's the demand zone. So price has retested this demand zone. Now if I wanted to trade this, all I would have done is go to the 1 minute and look for an opportunity. But sincerely, my bias. I had a fixed bias, and sometimes it can work in my favor, sometimes it may not work in my favor, because sometimes having a fixed bias will make you miss some moves, and then the market does something, and then later you wish you actually caught that move. But let me show you, if I had a bias to say, because I've seen this break of structure, I will still take a trade in the direction of the trend, because I know that the 4-hour is strongly bullish. But at the same time, I know that it can pull back at any time. So, but I've seen this, I would decide to say, okay, let me take this. But this rejection candle here, this massive rejection here, didn't allow me to have that bias, and that's why I didn't take that trade. But if we're to go to the 1 minute, let's see what we had on the 1 minute, and how that could have actually been also a good trade. So for me, seeing that massive rejection candle, I didn't want to take a trade in that same direction again. That was just the reason why I didn't take it. But if I was to take this, I know that price has retested, my demands on the 15 minutes. So I'll just look for my 1 minute entry. So let's see if we get something like that. Just a sec. Oh, why is this not playing? The candle is not playing. So just give me a minute. Oh, sorry guys, you can see, look at this, what this guy is in here. It has gone without me even entering a position. Okay, well, it's playing without me doing anything. I don't just my internet misbehaving. Okay, anyways, based on where price is right now, you can see that based on this movement, there wasn't really any entry for me. Based on the entry of I have to see a change of character and also a flip. So you can see here there wasn't really any entry. The market was just doing whatever it was doing, and this is how, because I'm looking for a chalk on the 1 minute and a flip, I literally wouldn't have any position here now, and I wouldn't be chasing price, right? So with this, we really don't have an entry. So let's just go back to our 15 minutes and see what we have there. Just in case I'm disconnecting. Okay, I'm sure I'm really disconnecting, but hey, just pardon me, okay? All right, so we really didn't have an entry, so we just continue to play this anyways and see what we have. Okay, so now we had a break of structure here. If I draw this again, you can see we had a little high here, pull back, a high here, pull back, and then we had this high that took out this high, and then we pull back, and then we had another high that took out this high. So we have this. So expectedly we should have maybe a retest of this zone, and then maybe a continuation or a change of character for us now look to trade a counter trend, right? So let's see what happens. 15 minutes. Let's play the next candle. Okay, so now on the 15 minutes, we've tested, this area. I refined this, but you can actually actually draw this to this candle, for example, and this entire area will be your demand zone, because this was the last candle down, or the last area, not necessarily the last candle down. This was an internal candle. That's why it's white. So basically, this was the last candle down before that push up. So this entire area is like a demand zone. But remember, when it's supply, 4-hour supply, and the 4-hour supply tells us that price can change direction and start pulling back anytime. And that's why, looking at this giant wick here, we don't want to gamble taking a trade in the direction just like you're running into a wall, literally. So we're waiting patiently. Either we break this 4-hour supply zone to the upside, then we can now look for continuation, trend, or we have a change of character on the 15 minutes so that we can now look to short the 15 minutes. So let's just continue what we're looking for. So, okay, so this seems to be going just fine. Now, what is the low that we're looking at? We need to be taken before we can, begin to look for short. This is the high. We have this high. This high was taken by this. So we had this high. This high was taken by this. And what was the low? This was the high that was taken by this move here. We want this low to first go. If this low goes off, right, let's see price break down through this low, and then we know that that's our first change of character, and then we expect a retest, and then we can now trade that down. That is basically what we want to see, right? So with this now, we'll continue to play the candles, and then we'll continue to see what happens. Now, if this was a live market, this is literally, I'll put an alert here, for example, like this. Sorry, I can't put alert because this is simulation, but I'll put an alert here on the market so that immediately I have that break of structure, I'll then come back to the chart and then look for, a position to enter. So yeah, so let me just play the next candle. So no break of structure still. You see, it tried to take out this high, but it failed. Rejection, good sign that, momentum is sort of slowing down. So let's see what happens. Around 11 a.m. still nothing. 11:30 nothing. 11:45 nothing. Cool. 11 or 12 p.m. Now by 12 p.m. we had this low taken out. As you can see here, this low was now taken out effectively. Now what does that tell us, right? That tells us that we can now look for a retest, and then we can look for opportunity to short. So now, because remember our bias since from when the market opened in the morning, whereas we knew that the 4 hours broken, there was a break of structure on the 4 hour. After a break of structure on the higher time frame, what do you expect? You expect a pullback. So we're expecting a pullback, and that's what we wanted to trade. Now we've waited all this while, and you can see that when it comes to trading Forex, at the end of the day, it's a waiting game. Literally, you have to act like a sniper. A sniper can stay in one position for days, just looking for that perfect condition, to take a shot. And that's what you literally have to do. So all through the morning from 7 a.m. you can see until 12, literally, before that happened. But that doesn't mean that you have to stay on the chart, watching the chart from 7 a.m. to 12. No, you have, alerts that you can use to set alerts based on what you're mapping and your market structure and all of that. So, but anyways, 12 p.m. we have our change of character, and we're excited. We're happy to see that, right? So after change of character, what do we expect next? Now, if I draw this for you, let me draw something here. Let me just draw something here. So you have here, for example, this low here. Let's see what happened. Let me even make this just a small zone. Let me refine that to just a week and make that 15 minutes. So what do we have here? Let's look at this price action here closely. Okay, so what you see here now, you can see that price, this was price, made a high, pulled back, made a high, took out that high, and then pulled into this zone, and then rejected, tried to break this high, but failed, which is a good sign, and then returned and came here, and we had a flip, and then we had a change of character on this candle. Now, a few things to actually, take note of here, right? Now, if I just draw this to this white candle here, you can see that price came here, rejected, returned, and then rejected before, the break of structure. Now, this last rejection is called a flip zone. And the flip zone, it's simple. You had this demand. This area was an area of demand. And why was it an area of demand? Because this was where money came in that pushed up, that took out this previous high. So that's why it's an area of demand. So when price returned into that area of demand, price reacted to that area of demand. And then price returned again and reacted for the last time before pushing through, that area of demand. That means there was a demand failure around this area. Now, this is a flip zone because price came in here, this candle, and pulled back up before, sort of break and changing character. So that's a flip. So that was a demand to supply flip. So sometimes this can be called, sometimes you may see something like D to S, right? D to S flip. So that means a demand to supply flip. That's what happened here. So demand pushed price up and then supply, pushed down. So that was a demand to supply flip. So when we see a flip zone, it really makes that flip zone to be really important, especially when that flip zone leads to a change of character or a break of structure. And now, in addition to that, we also see that this last candle here that pushed up took out the previous candle's high, as you can see here, where you see, where the crosshair is. You can see it took out the previous candle's high. And for me, that is liquidity, right? And what that simply means is that price sort of swept liquidity. Now, that's a concept, of course, in terms of trading to increase the confluence or to increase the strength of a flip zone. Now, because I've seen this is a flip zone number one, this flip zone swept liquidity, took out the previous high of the previous candle. That makes this flip zone, a strong zone for me, right? So I can now draw this flip zone as a strong zone for me. And what does that mean? What that means is that because I've seen this change of character, I would expect price to return into this zone, and then I'll go into the 1 minute and look for an entry to trade, to ride the price down. Now, without a flip zone like this, ideally, I would have drawn my zone here. This candle here, that would have been, where I would expect price to return to. But I don't have to wait for price to do that, because after this, price action here, flip, change of character, without this flip zone, I would have expected price first to return to mitigate this area before I look for a sell. But because we have a flip zone here, I'm willing to take, a trade from this zone instead of having to wait here, because a lot of times it wouldn't happen. The flip zone and the sweep of liquidity, right, increases the strength of this POI, literally. So this is a sweep, this is literally a sweep zone, right, because of the liquidity was swept, and also we had a flip here. So let's see what happens on the 15 minutes, 12 p.m. Okay, now what happens? The next candle, you can see, tapped into the zone and then, sold off again. So what do? We go down to the 1 minute, right? So we go to the 1 minute. Now remember, oh, it has already played out, but let me just take out this candle so that you see what I would normally do. Immediately, for example, after the change of character, you can see that this line here was a change of character in the 15 minutes. Immediately, for example, price returned into that zone, my alarm would have gone off. So I would have already been looking at the market at this point like this. And what would then happen? I would wait for, to see what price is going to do. Now, I know that this was the last low, so I'm going to draw my zone here, as you see here already. I haven't taken it out of my chart. So I'll draw my zone, as you see here. So price returned into the zone. And then what happens next? Okay, price rejected the zone, right? That's demand was still demand. It was a rejection of demand, sort of, or demand pushed the price back up. Okay, so now this for me looks really nice, because the next thing I just want to see is price maybe make a high and then break through. Immediately price takes out this previous low. That is it. I'll draw my zone and then I'll look for an entry. Okay, so let's see what then happens. So the next candle, price is pushing. Okay, cool. So this next candle now has taken this previous low. Now what do we have? We have here, let me draw this. Price was coming from here, broke and changed character on the 15 minutes, returned a little bit, made a low, returned here, came into the zone, rejected and retested our 15 minutes POI sweep zone, came back into the zone, rejected it a little bit, and then bam, we have the change of character in the 1 minute. Now we had a flip and a change of character, and that's my standard entry, right? So with this now, all I just need to do is now pull this flip tool, as you can see here, and I'll usually draw it on the last candle, up and all of that. I'll just draw it. Sometimes I can draw it as maybe the last candle here like this. Sometimes I can draw it like from the last candle that rejected and all of that. So it depends, but it has to cover the last candle, the high of the candle of the flip, that caused the change of character. So drawn like this, and then I'll just draw my tool, and I'll just put my tool in here. So typically, I'll just pull this. This is a short position, a short buyer. So I'll just pull this. I'll put my stop above this zone to 2 pips. And that's it. So ideally for me, I'll always go for a 1 to 5, even though this is a pullback. So price can literally pull back deep, or you can just pull back a little bit and then reverse and continue, the upward trend. So with this now, I'll just put this in place, copy all the parameters of, this trade, quickly copy all the parameters, entry price, the profit, the stop loss. I'll just copy this into, my MT4 platform and then allow price to play out. So the next candle, what happens? You can see no tag. Yeah, this didn't tag, but I think on the of course on the trade I took anyways, this actually tapped that entry anyway. So should be maybe closer like that. Yeah, so you can now see, oh, there was even a deeper push, so you can see that, and that was it. Okay, now look at what happens. You see price here, after tapping in, came close to TP, and then you can see started dancing around. Now, if you've not mastered your psychology, you would most likely take your profit here. And the reality about trading is that price can do this, dance around, dance around, dance around, dance around, and then just take you out. And but for example, the way I trade, I always take my 25% off at 4 hours. So this would, even if it reverses, this would be a break even trade. But then it can dance around, and after it is done dancing around, it will just tag your tag your TP, right? So price did that, and you can see played around, did all it wanted to do, and then bam, that was it, 1 to 5, right? So at minimum 1 to 5. But this is of course the pullback, and that was the bias for that day, and that's why I didn't even take out, don't need to bother showing you this, because my bias was to trade the counter trend, and that was it. So this is basically how you trade the counter trend, right? So after a break of structure, especially on the 4-hour, you expect a pullback, and then that is how you catch the pullback. And then what happens after then, you now take any position that shows up, right? And then you can always now look for how to catch the lower high and then trade in the position of the major trend. Okay, and that's basically how you can capture that. So yeah, so I hope that answered your question. If I should show you today's price, actually you can see that after all the dancing around, the break of structure on the 4 on the 15 minutes and all of that, price returned into this demand zone today, and you can see how price has now returned to take out the previous high, literally. And that is how price really literally behaves all the time. So but this is based of course on market structure, your understanding of market structure, your understanding of demand, supply, and all of that. Okay, so yeah, I hope that answers your question. Yeah, just let me know if that answers your question. Okay, so I've also answered the question on lot size, risk management, FTMO, news trading, calendar, and all. So if you have another question, feel free to unmute yourself, or you need some clarification, feel free to unmute yourself and ask your question. Okay. All right, you're welcome. Okay, any more questions? You can unmute yourself, I believe. Yeah, so time to practice. The truth about trading is, aside understand, now I've explained this for you and it really looks simple, but I can tell you the truth. Even I, as I'm explaining it to you, in terms of executing all of this, it takes a lot of work. So for you to, you can't take out experience from learning how to trade. You have to get that experience, and you can only get it by literally digging it in the market, and getting your feet wet and understanding how price moves, understanding the emotional side of trading. Now for you, because you'll be using demo accounts, your emotions may not be too involved, but eventually you would have to use maybe some money to get a little account, and that is where you begin to see the real effect of your psychology. Your psychology begins to kick in, and you can really begin to test all of that in the market. So but for now anyways, it's perfectly I think it's perfectly okay to just start trading using the FTMO trial, get familiar with the account, set up the position size the way you've seen me do it, and all of that. Just do all of those things, and I believe it will begin to solidify your understanding of the market, right? So yeah, so let's see. Okay, MT4, MT5. Well, I would say go with MT4, right? MT4 is the later, has always been the old, the rugged and old one. MT5, it's literally the same thing in terms of usage, anyways. Because for us, or the way I've shown you how to trade, I don't use indicators, I don't use all of those things. So it's just a platform for you to execute trade. Where you really do the work is on Trading View. That is where you're doing your analysis. That is where you're saving your chart work. And by the way, it's also good to mention here that when you start your analysis on Trading View, it's always good to maybe create a layout, name it something, call it your own name, and also always put it to auto save so that any chart work you're doing will automatically be saved for you. And anytime you open your trading view, you can have access to that. A lot of the work, happens on trading view. That's a lot of your analysis, a lot of your, annotations. You can see here, all the things you see me post on the group, for example, I write all of those things here. And that's all part of my analysis. I'm building an analytical picture of what I think price is going to do. Okay, and that's all part of you developing your skill, your understanding of the market, and how to follow price action. And you literally need that experience to be able to eventually become what you desire to become. And let me tell you the truth, it's not going to take 1 year. It's not going to take, it may take 1 year, it may take 1 year depending on your person. It may take 2 years, it may take 3 years, but it's those who stay long enough that eventually master any skill. And eventually people say, hey, you're just lucky and blah blah blah, but that you've gone through different emotions, losses and pain, and and all of that before you arrive to where you are. So it will take that experience to literally do this yourself. Set up the platform as I've shown you, MT4 preferably. Set up the position size on MT4 like I've shown you. Practice demand, supply zone, and follow price. I've just done briefly now for you was backtesting. Simply that means you just take out the replay candle, take it to a particular location, and then you try to follow price action. But you can also forward test. So tomorrow, for example, the market's going to open, London session is going to open. Try to map out London session. When I post my analysis on the trading view, feel free to like it, feel free to compare your own price action with the way I've drawn my zones, what I'm looking at, and that will begin to improve your understanding of the market and also all of these concepts. I'm bringing all of these concepts together, so that is the only way you can really develop experience, and eventually these things will begin to make sense to you. Yeah, so that is it. Okay, so any other question? Can't see any other question on the chart. So well, I'm going to be releasing this the videos that we've been recording so far with you. I think most likely maybe over the weekend. If not over the weekend, then maybe next week I'm going to be releasing it. So you literally have the opportunity to rewatch the videos and then maybe clarify any things that are left uncleared. But yeah, so you guys should utilize this much, and of course engage the videos and ask questions there. The paid course and also the paid platform is not yet available because of several because of a particular payment infrastructure we're trying to put up, and then we're waiting for that to be set up. So but until that, the full course itself will not be released or be ready, but you can utilize the free training we've done and all the recorded videos that will be put out to really deepen your understanding, engage the videos, ask questions there, so that others can also can also learn from your questions, and we'll try as much as possible to to answer those questions and to help you along. So yeah, so guys, if there are no questions, I think this is a good place for us to call it a day. And to also, this is me also expressing my appreciation to you guys. Like I said, when we started, I had about 10 people who were selected for the free mentorship, but obviously you can see just the 3 of you are here. And it's well, it's interesting because, well, the first will become the last, and the last will always become the first. That's the reality of life. People want the easy path to success, but there's no easy path to success. Nobody who you see that is successful will tell you it was easy, except you're born into a royal family, and most of the time it's a boring life anyways. You never achieve anything really significant. So, but to become successful, you have to put in the work. You literally have to work it. So I'm not surprised that just the 3 of you have been at least trying to be consistent and also showing up all the time. So well, I wish you all the best, and I look forward to sharing more with you, and also to see your progress on how this has really helped you. After this, I'll also be sharing a kind of feedback form with you anyways, because I want to get your feedback, what you think about all that was third, all that I thought, all that you learned, and everything about the free mentorship. So that would also be helpful to others to try all of this out. So thank you so much for the time we spent together, and I look forward to your success. All right, so cheers guys, and
Thank you, Jonathan.
You're welcome. Thank you.
Thank you. The course, let them set it up. And mentorship, right? The course comes with mentorship, right?
Yes, so the course comes with full mentorship. So basically there will be, when the course, now another thing is, when the course eventually launches, my posting on the Telegram group might become staggered. So a lot of the posting and detailed markup, detailed review will be happening in the closed group that we're gonna have on Discord, basically. So yeah, so but that will come, with closed mentorship and maybe even live trades. Maybe I'll have even sessions where, if for example I want to take trades, we're gonna have those sessions where we can do it live together. So yeah, so the course is gonna be it's not just a course. So it's a course. It's an exclusive group of users where we can interact, not like the Telegram where I'm just one posting, and the only thing you can do is react. But there you can actually ask questions, you can chat, you can share chat work, you can share your chat work. It will be a robust environment, more like. So yeah, so that's it.
Thanks.
All right, you're welcome. Okay, so enjoy your day, guys, and God bless you, and bye bye.